Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly resistance, which is currently still acting as resistance. And if we look closely, we can see how this fake breakout to the upside essentially created the head of this potential head and shoulders, with the left shoulder here, the head here, and the right shoulder here. Now, in a situation like this, bearish price action could be expected away from the zone for the market to actually create and complete this pattern. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how a massive amount of rejections were all created from this zone. From here, all this move to the downside was printed. Again, here, the market tested its zone and rejected. Here, again, respected as resistance. Here, again, respected as resistance. And we can see how lately, just a couple of weeks ago, the market once again respected this area as resistance. And at the moment, the market is approaching exactly the same zone. We can also notice how we actually have an impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how this zone can be adjusted with the area which is in between the 0.618 and 0.786 of the Fibonacci taken on this weekly impulse, which create a quite strong resistance zone that the market could definitely try at least to reject to the downside, and we should expect the market to at least start to find some resistance when it actually enters this area. This is definitely a possibility. Going down on the daily time frame, what do we have? Now, on the daily, we can see that in approaching this zone, the market is also creating a W formation. And in general, after the creation of a W, what you would expect is a potential rejection to the downside for the market to go and complete the W formation in the neckline, which is previous resistance turned support. Now, if we go and see what we have when it comes to the commitment of traders and we look at the euro, we can see that in the long term, the euro is getting very bullish, going from minus 47k net positions all the way up to plus 148k net positions. So in the long term, euro very bullish. However, in the very short term, we can see a slight decrease of the net positioning going from 165k to 148k, with shorts getting increased and added. We can see 6.8k shorts added with the last report, and longs getting closed and decreased, with 6.8k longs getting closed from an institutional perspective with the last report. This creates a short-term weak euro, which is exactly what we need for a potential completion of this W formation at the neckline. Even if after the market could easily continue higher, there's a good chance for at least the completion of this W formation. And if we go and see what we have when we look at the JPY, we can see how the JPY is getting quite negative, going all the way down to minus 75k net positions, with 6k shorts added to the last report. Now, a weakening JPY is supposed to make EURJPY continue higher. However, as we have said, as the euro is getting weaker, there is the possibility at least for that short-term completion before then getting more bullish continuation. This means that even though the monthly head and shoulders has a lower probability of getting completed, considering that the JPY is getting weak and the euro is getting strong in the long term, at least this short-term W has a good probability of getting completed, because this would be a good area inside of which more longs could be added on the institutional side of the market on the euro and shorts on the JPY, strengthening EURJPY. So at least the market should be attracted to this potential completion of the W formation. So how we could be approaching this potential move to the downside and completion of the daily W formation. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market will shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete this W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course and mentorship program completely for free. In fact, you will have the possibility to gain access to all the courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that you have the possibility to gain completely free access to the mentorship program by just following these easy 3 steps. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.